Morning, everybody. How are you all doing? Happy Monday. Back again. Another week, another dollar. Usual stuff. How are you all doing? Fine Monday morning. Steve, morning. Danny, JC, Themba, Evil, Callum, Virginia, FTNet, Neo, Gregors, XR, Update, morning. Mark, how are we doing? So, it's Monday. That triple witching on Friday was interesting, wasn't it? Didn't do anything. Absolutely nothing. Totally dead. So, yeah. Or quadruple witching, I think it was, wasn't it? But, yeah. Got some movement. There was a lot of movement during the New York session. But, yeah. No ADRs, nothing. Rubbish. So, interesting one that was. Market obviously did everything it needed to do in the days preceding the expiries of the options. So, yeah. They don't always go mad. Sometimes they do, sometimes they don't. Morning, Amy. So, yeah, we'll see what happens next time in 3 months' time. Right. So, this morning, we're going to have a whiz through all the pairs, have a look at the news coming up this week. It's not a particularly busy week this week. Got a few bits and pieces, but I've just got out of what did I get out of this morning? Aussie US. Not really feeling this at the moment, Aussie US. It's tightening its range a little bit. So I've just got out of the short on that this morning. We hit this propulsion gap when I woke up. We just got a reversal alert out of that propulsion gap, which is this low, this high here, which that broke. They've hit that on Friday, bounced off of it, added it. They tried to get through it this morning. Buyers overwhelmed them, and then we've had a reversal alert. So structures changed long. So just got out of that. It's a very small profit. It's only $150. Originally, I was looking to try and get down to range low on it, but you can see ADR is there. You can see we've had so little movement on this since I got in. So we've gone 3 days where we've got absolutely nowhere near ADR. I'm looking for 125 ADR as a target. There's not really any news specifically. I think it's going to move it. So I've just decided to bail on it. Nothing exciting happening. So that's what I've done this morning. Overnight news, or rather over weekend news. Nothing particularly exciting from anywhere else but Japan. We are fully back on the intervention talk this morning. So Kanda warns of negative economic impact from excessive Forex movement. Kanda to take appropriate measures if Forex fluctuations are considered excessive. FX report has no impact on Japan's foreign Forex policy. There's another one where he says, states readiness to intervene if necessary. Yeah, so usual stuff. Bank of Japan really not happy about this 160 push. So I have got pending orders ready to go on the yen. So US yen, we're back to square one, basically. So this was the intervention. That was the previous intervention level. That was the forecast intervention level. That was the actual intervention level. That was the second intervention level. We are within an ADR, 3/4 of an ADR, basically, to hit that today. Highly likely it will hit it today. So if it hits that, I want to be in because there's nothing above, basically. So, when we make these all-time highs, you will get potentially that type of movement because the market has got nothing up there. There's no sellers up there. So we have to go and find wherever the liquidity is. By that time, it's too late. The Japanese have to do something about it. So getting ready for a short. We didn't get there quite on Friday. We were very close at the end. It rallied at the end as well. We did break the high during Asia, but it's pulled back down again. So we've got this hourly reversal alert here. So if we get a reversal alert, I'll trigger my first position. If it then rallies back up to 160, that's fine. I have the option to add a second position up at 160, but I'm going to monitor. I'm not letting the EA run this. I'm going to do this myself. I've just taken these trades with the EA, so I can obviously just use the close button when I want to. But I'm going to manually scale into it. If the intervention comes, I've got 2 orders pending, ready to get gathered up on the way, which is between 100 ADR move down and 150 ADR move down as it stands at the moment. Yeah, so if we are going to get an intervention, I want to be on it. But we'll see. I'm not using high risk particularly. I'm just using 0.5% over 1 ADR, which gives me the option to scale into it. But we'll see what happens. Just want to have something on it, basically, in case it goes. So that's weekend news, but that's the main one, is obviously that intervention talk again by the Bank of Japan. Morning, Monkey, Reverend, Yopko. So this week's news. So I'm just seeing what the breaks are this morning. There aren't any. Wow. Not a busy morning. So today we've got no news. We've got Macklem speaking later this evening. That's the only news. So it's Talking Head news today only. We've got IFO Business Climate and Waller speaking this morning. Waller speaking now, actually. Yeah, there we go. Does not comment on policy or blah, 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 blah. Sorry, he's spoken and not said anything. So there's no news at all today, really, apart from that IFO Business Climate, which is kind of a little gauge on how business is doing in Germany, which doesn't really tend to do much. So main news we've got coming up this week is CPI tomorrow. So this is your main news for the week, which is 1:30 tomorrow afternoon, which is CPI. So it's the inflation figure for the Canadian dollar. As we know, interest rates have dropped by 0.25%. We haven't had any real solid forward guidance yet from the CAD as to what they're going to do. It sounds like, from what they've said, very much what Euro are going to do. We'll drop it, we'll see, we'll wait. We'll drop it, we'll see, we'll wait. So probably 1 month drop, 1 month pause, 1 month drop, 1 month pause. However, if the CPI numbers come out lower than forecast, it will be more like 1 month drop, 1 month drop. Then we'll see what happens. So important figure. If we get a red number, we're expecting inflation to come down. So the CPI will drop from 0.5 to 0.3. Year on year, they're expecting it to remain the same. So, and the trimmed, which is, the trimmed is not as important as the main CPI, really, but that's forecast to drop as well. So basically, the overall is, if we get a 2.5 or lower, or we get a 0.2 or lower, that will be indicative of a potential interest rate drop next month again, which will weaken the Canadian dollar again. So we could get another drop in the CAD tomorrow. Obviously, if they come out bullish, it means they're not going to put interest rates up. It means they just won't drop interest rates. So it's not massively bullish, but it's got the possibility of being massively bearish. So more likely a drop tomorrow, but we'll wait and see what the numbers are. We've got consumer confidence from the US tomorrow, which tends to get whipsaw. Aussie CPI on Wednesday morning. So that is, again, forecast to drop. Australians have said there's a good chance they might need to increase those interest rates. If that comes out at 3.6 or higher, highly likely they will do it, meaning that the Aussie will rally. So potential for a move on the Aussie. If they get the forecast, I suspect we probably won't do a lot, but we'll wait and see what happens. It's very difficult to call the Aussie and New Zealand at the moment because their CPI numbers are still far too high. Sitting up at 3.6 and 4. And their interest rates obviously are very high as well, but the Aussies have got a lot more wiggle room on theirs. So these are probably going to reset to zeros, which will mean they're more sort of neutral to bullish than bearish. So Aussie and New Zealand still the only two real currencies that have potentially got positive moves. Bank of England, we've got Bailey speaking at 10:30 on Thursday. GDP numbers and unemployment claims for the US on Thursday afternoon, and then pending home sales, which doesn't do a great deal, but the unemployment claims is the one they'll be watching. And then we've got the GDP for the CAD and Michigan, which is the revised number. doesn't tend to do an awful lot, but PCE might. So it's not a particularly exciting week this week. As I say, Tuesday is where it kind of revolves around that. We've got very little important US news. Unemployment is probably the biggest thing this week. GDP's taken a bit of a back seat. If it does come out as a big differential on GDP, though, we will get a move. But it's kind of taken a bit of a backseat to CPI at the moment, as we would expect, because we're still waiting to find out when that first interest rate drop is coming on the US. So that's this week's news. Not particularly exciting. I would imagine we'll probably have a fairly rotational week this week. Obviously, the main thing that could impact us is that. Yeah. So if that US dollar does get positive news a couple of times this week and manages to get a decent rally, or if today it just decides to go for it, it's all going to be hinging on whether or not that Japanese yen is going to do another intervention move. And if so, yeah, you do not want to be long anything against the yen, obviously. So we'll see what happens. There's no ADRs this morning, as you'd expect. I was expecting a little bit more movement this morning, to be honest, in the indices and in the dollar, because that triple witching didn't happen on Friday. I was expecting a bit more to come into the indices this morning, a bit more options purchasing, but doesn't seem to be doing. This is why I was looking at the US indices when we came on, just to see what was going on with those this morning, and there's nothing. You can see, look, that was all the volatility we had on the indices on Friday. Normally on a triple witching, you'll find yourself 150 ADR and above. It's just didn't happen. So very quiet at the moment, the markets. There's absolutely no trades this morning on the FTSE at all. Pre-market range is too tight. Opening range too tight. There's no volume. DAX taking a 5-minute ORB, which is not even happening. So there's just no volume today. Market's dead. Not even sure I want to get involved in it this morning, to be honest. Seeing as it's the only trade that's going to go on today, I might as well stick with it. But yeah, nothing happening. Morning, everybody else. Adrian, is England going bust? No. Hope not. Why? What have you heard? No. Well, not as far as I know, anyway. But then again, what do I know? So yeah, just waiting on that reversal alert, basically there on the US dollar yen. RSIs. As you can see, it's all about the yen still. So all the RSIs that we've got this morning are 4-hour. We've got 2 1-hour RSI extensions on the 70-30 level, so just small ones. And they are all yen based. So US dollar yen massively extended, as we know. If you look at the 4 hours on these, yeah, so big extension on these, nicely extended above the 80 level. It's not really to do with the RSI in any way, shape or form. It's to do with the intervention and whether or not it comes. Same with the pound yen, extended on the 4 hour. Not quite as much. We've got the CAD yen, which is the same as the US yen. Don't trade both. Aussie yen. Aussie last week, look at that. Just absolutely took off. But this is obviously all on the back of the potential interest rate rise coming. So we broke out of a double monthly high on the Aussie yen on last week. So that's really nicely extended. Potential pullback into that high. That's the propulsion gap that broke through it. So that's where all the buyers are. And that's it. And then you've got the pound CAD, which is the only other 4 hour extension. Which is I'm long on that already from the hourly RSI on Thursday last week, but Friday obviously we didn't do anything. So just looking for a push back up into that propulsion gap, those lows. But not a lot of movement really. So there's no RSI extensions really to look at apart from those which are all yen. So we'll whiz through all the pairs, have a look at what's going on. See how we go. Morning. I can't say your name. What's shit? What's shit? How can England go bust if we print our own money? True. They stop printing money, basically. Don't forget, we got an election coming up on the 5th of July. So things will change, basically, in the next couple of weeks. But how fast, we'll have to wait and see. But yeah, we're not going bust. We've got the biggest banking sector in the world. We're not going bust. Sorry, I'm really tired. I did a massive long bike ride yesterday. Went mountain biking and yeah, 25 miles off road. So it was quite hectic, to say the least. So half asleep today. Right, so we'll go through all the pairs individually, have a look at how everything's positioned, see if there's anything getting anywhere near decent support resistance levels, and then go from there. What's happening with US dollar CAD? Not a lot. We'll get to that one in a bit. Right, Aussie CAD. So we'll start at the top. I'm going to go through all the Swiss pairs in one batch. I'm going to go through all the yen pairs in one batch because those are the two that I'm not trading at the moment until we know what's going on with the Swiss. And obviously the yen is a mystery as well. Seems that Polish name is a tongue twister. Yes. I don't speak Polish. I'm useless with names, all names that are not any foreign name, basically. I've always struggled with foreign names. I don't know why. Because the letters are in the wrong way and they just don't work the same way as we speak. So I struggle. So Aussie dollar CAD we'll start with. We've got symmetrical triangle formation at the moment on this. So we are contracting, which is, I got out of the short on Friday in the propulsion gap. So that hit target basically. We're contracting down now, as you can see. So the Australian dollar potentially bullish because of obviously interest rate rises that are on the cards. Canadian dollar bearish because of interest rate drops, which have already happened. So bias on this one basically is a long. However, when we get, if we keep getting this sideways move with the US dollar, that does give the Canadian a little bit of strength, hence why we're not really going anywhere. But as you can see, the Aussie is basically bullish at the moment off the back of the interest rate rises. So you can really trade this, I think, at the moment in either direction, just because the CAD is oil-based and linked to the US dollar. So anytime we get any power on that US, this is going to get powered up, which will give it enough to move in the opposite direction. But really, the bias is long on it. So out of that short there, took a short there. Obviously got out way too early on that one. Took a long there. So as long as this thing is doing this, which it is at the moment, it's not going anywhere. No reason to not get in either direction really on it. Obviously, that is the bias. So we are bullish overall. So if you want to be more safe, you'd look more to take longs than shorts. But we'll wait and see what happens with the CPI numbers on the Aussie. Aussie dollar Swiss. So I'm going to go through all the Swiss francs together. I'm not trading any Swiss at the moment because the interest rates and the surprises we get from the Swiss all the time. So as we know, last week, the Swiss decided to change rates without telling anybody again. It's part of their remit, basically, to shock the market. They always do it. It is unsafe in that respect because you don't know when it's going to suddenly go on a multi-week run for no reason whatsoever. Jordan came out from the Swiss National Bank last week and also said that they will happily intervene in the markets, in the FX markets, if they deem necessary in either direction. So they're happy to strengthen the Swiss or weaken the Swiss on demand. So you've got a currency there, basically, which at the moment is completely erratic and can take off in any direction for any reason and for no reason. So you're basically trading something that has no real fundamental bias at the moment, which is fine because obviously it will still go up and down. And as other things move, it will get moved against. So if we suddenly get a massive rally on the Australian dollar, this will go up. But if the Swiss decide to do a massive buy at the same time, it won't go anywhere. Yeah. And the Swiss is a very powerful currency. It will just move and nothing really stands up against it. They've got the potential to pump loads of money through the Swiss. And it's a big safe haven as well. So a lot of or pretty much all countries use the Swiss to pump into when there's any time of crisis. And if they're uncertain, when we get to that fear area, the Swiss franc powers up dramatically. If we get to the fear area and the Swiss franc powers up dramatically and they decide to drop the interest rate without telling anybody, this thing could go absolutely anywhere. So it's just a bit tricky to trade at the moment. Banks still use it in the same way. Yeah. So when you get extended, you pull back. Yeah. Still have profit take moves on everything. If you push money into it, you pull money out of it. Yeah. So it still moves up and down. I'm just worried about a massive strong push starting on this for some reason. We've got still conflict going on in the Middle East. We've still got flare points with Israel. They are starting to scale back the Gaza war now because obviously they've done it. But we've now got other countries in the Middle East firing rockets into Israel. So things are still like a powder keg over there. And if that happens, this thing powers up and just doesn't stop. However, the problem with trading the Swiss, in my opinion, at the moment is you've got all the tensions in Middle East, which means the Swiss will get massively bullish if there's problems. And you've got the fact that they keep dropping interest rates without telling everybody, which makes it massively bearish. So it's massively bullish and it's massively bearish. It's just impossible to pick a direction on the thing. So it's just safer not to trade it, I think, for me at the moment. And also that interest rate differential now is getting a lot wider. So the bigger the interest rate differential, the more money you pay on swaps. So this is going to start becoming more expensive to hold as well. So just really not interested. The fact that their inflation is below target means that they can do anything they like with this. If they want to drop that suddenly down to 0.25 and take 1% off, they can, because they're at target for inflation. They're forecasting them getting down to 1 by 2026. Yeah. They don't need to do anything, which means they can do anything they want, which obviously makes them money because they know what they're going to do and they can bet on whichever direction it's going. So all the Swissies at the moment, you kind of have to look at the opposite currency. So Aussie long, New Zealand long, everything else pretty much short, isn't it? So Aussie Swiss, we'd be looking at more of a long bias than a short bias. CAD Swiss is a short against a short, which isn't really a bias, but it will get pushed around with oil and the US. So at the moment, looking to push up into that propulsion gap or down into that propulsion gap. At the moment, it's a short from last week coming down into here. So if it pushes up into there, you'd be shorting it down to there. You got the Euro Swiss, very much the same. Push up into that propulsion or push down into there. There was an entry there, which you would have got out of because it would have hit target. So right now it's sitting in the middle of nowhere. But long-term direction, obviously, no idea. Pound Swiss, again, we're looking for the pound to drop its interest rates. We've had nothing out of Bailey since those numbers last week. So we're wanting some confirmation of when we're changing rates. It looks like July, possibly August still. So again, we don't know. So again, bear against a bear. Most of the time you're going to do that. And this is what happens when the Swiss powers up. Yeah, so that's what you're going to get. But there's potential for it to just do flag breaks like this all the time. Or the opposite. You know, it's just erratic at the minute. New Zealand dollar Swiss, again, bullish bias on the New Zealand dollar. Potential interest rate rise is coming. This could make a new high. We've just made a higher low. Just made a higher low, though. It's virtually a double bottom. And then you've got that high up there. So right now, probably fundamentally would want to do that. And as the Swiss have dropped the interest rates, as you can see, likelihood is it will do that. So more bullish than bearish. I'd much rather be not taking shorts, much rather be getting in longs on RSI extensions, ADR extensions to the downside. And US Swiss as well can go either way. So US is still neutral. We have absolutely no idea on the US. They haven't given us any clue as to what's happening. So all that happens with the US is it moves on news and then it stops. So if it moves on news and the Swiss moves on news and they both go in opposite directions, you're going to get a big move. Otherwise, if both go in the same direction, you're going to get more of a range-bound move like this. Push up on news, push down on news. Yeah. Push up on news. If we get bearish US news this week, we'll be down there. If we get bullish US news, we'll be up there because the Swiss franc is weak. So we don't know. But of all of the pairs, this is probably the safer one to trade of the Swissies because the US is the only real neutral currency at the moment. We're expecting everything else to be dropping. And the US, we haven't got a clue at the moment when they're going to do their interest rates. So it's more of a bull than a bear. But the US will move dramatically on news. So you just have to wait and see. So it's very hard to trade any of those at the moment. All the yens, as we know. So we'll start at the back with the US yen. So getting ready to get in shorts. Just waiting for that potential intervention. We've got a reversal alert about to happen potentially today. So this is either going to give a reversal alert and the bears are going to start to move in, or it's going to go bull and head for that 160 level. Both of these are well within ADR today. Yeah. So average daily range is down in that range and ADR is above the 160 high intervention level. So we are basically 32 pips away from 160. And the intervention happened at 160, 145. So big sell area coming up. Again, New Zealand yen, we're out at new all-time highs. Pound yen out at new all-time highs. Euro yen just about to. A lot of strength in this euro over the last week, but we're about to break that intervention 2 level. No, we're not, sorry. That's just a monthly high. Basically where the intervention started, all up here, all within ADR. So I got pinging going on my phone. So shorts, Swiss yen massively out above all-time highs. So there's the news drop last week. It's undone that because the yen is so weak. This just shows you how weak this yen is, yeah? The Swiss franc dropped its interest rates unexpectedly. The market is tanking the Swiss franc. The yen is weaker than the Swiss franc, who's just dropped its interest rates. It's just dead in the water at the moment. So, yeah, so that's out at new highs. Obviously, that was the intervention level and the second intervention level there. Absolutely blown through it. And Aussie yen and CAD yen. So CAD yen coming up to just filled the propulsion gap. And again, US dollar yen and CAD yen not far behind each other. It's an ADR for the CAD yen to get up there, but obviously that would just drop if the US yen gets above the level. And then the Aussie yen, new all-time highs. So all these yens basically waiting for Kanda or Ueda, Suzuki, anybody to come out and say, no, we're not having that. And that happening again. They're threatening it again, which means they have got the ability to do it. They wouldn't, I don't think they would say they're going to intervene. And it wasn't woolly, was it, this morning? It wasn't a, we are watching closely. It was, we are ready to intervene if necessary. Not a case of there's no doubt, is there? We're going to do it if we need to. So that means they can, which means they will. So it's just a case of when. So either the market is going to react and start to sell US yen, or it's not, and it's going to go above, and then it's just a waiting time, isn't it? So I haven't hit the sell button today because I think it's going to go and test it. It's too close to go, oh, actually, no, we won't bother. It's got to go and test that level, surely. So I'm waiting for it to get up there. If we hit that intervention line and I spot it today, in fact, I'm just going to set an alert up there. So I'm just setting an alert at the actual intervention level. It's 160.095. Basically, I've set it up, which is just shy. So I'm just setting an alert there just to tell me when we do get there, because I would be happy to hit the sell, just hit the sell button basically there. And then all these other pending orders will get gathered up. The problem with interventions, obviously, is they happen so fast, and the likelihood of actually getting filled at these levels is not really going to happen. It's going to slip. So it'd be nice to have a position on up there so that when the first order gets triggered, wherever it gets triggered, at least your average is going to be sort of a bit higher up, isn't it? So we'll see. But that's all the yens, basically. So we're waiting to see what happens with them. It's down to the market today to decide whether it wants to push it or not. Aussie New Zealand pulling back nicely. So this is a tricky one as well. I haven't got the EA set up on Aussie New Zealand at the moment, just from an exposure perspective, really. They're both at the moment going in the same direction, aren't they? Potentially interest rate rises on the Aussie and interest rate rises on the New Zealand dollar. So the theory would be that they're both going to be bullish. However, the Aussie is always the bigger, stronger currency. It's the bigger economy, the bigger country. It has bigger exports. It's just bigger. So everything moves faster and harder on the Aussie. So for me at the moment, the bias on this is kind of a long. But as you can see, it's just does these weird parabolic moves which catch you offside sometimes, like here. They will always undo themselves, but it's hard to hold them. So at the moment, for me, it's just a case of sitting out of this because I've got exposure on the Aussie and the New Zealand with other crosses. So this is the one I'm just not going to bother with at the moment. So mainly because of that squeeze again that I got into there. This is the second time this has squeezed me, Aussie New Zealand, in the last 3 or 4 years. It's just unpleasant when it happens. So but this one could go in either direction. Obviously they are both bullish at the moment, so it's a case of who gets more bullish news faster. If we suddenly get New Zealand saying, okay, we've set a date, it's July, it's going to do that. Yeah. If their CPI number then goes up, it's going to do that. Yeah. If the Aussie come out and say we're moving in July, it's going to do that. Yeah. So it's a case of waiting to see who announces first and who gets the news first. This week, we've got Aussie news. Yeah. We've got the CPI number for that's the wrong week. CPI number for the Australian dollar on Wednesday morning. So that's going to give us an indication. So we could get a bullish run start on Wednesday. So if you get into a long on this, I mean, there's no actual signals on it at the moment. You had a signal last week here somewhere, and then you'd have had a second entry, 43. You'd be in 2 now, one there, so you'd be averaged in somewhere around here, roughly break even. So Wednesday, if it hasn't come down to here and you're out on Wednesday, just be aware that CPI number, if it doesn't drop, which they're forecasting, you could have a run on the Aussie. If it does drop, you'll hit target. So I've got itchy nose today as well. Still there. Never going. So there's your Aussie New Zealand. Aussie US, bullish for Aussie, neutral for US. All the US pairs are like this at the moment because we've got no fundamental bias on the US. So it's a case of the US has kind of become a little bit of the whipping boy of the market at the moment, where whatever happens to the cross currency, it does basically. So if we get a massive run on the Aussie US will go up. All the other US pairs will just stay where they are. The pound could suddenly drop, and then pound US will drop while Aussie US is pumping. It's nothing to do with the US at all. It's just the cross currency. So obviously we know this thing just goes up and down on news all the time. So with that one, it's just basically a case of trade it really in either direction. As you can see, I've had loads of trades on this. All these US pairs at the moment are just great because it's so easy to trade it. Yeah, it's just going up and down all the time on news. So they are getting into moves, getting out of the moves, getting into moves, getting out of the moves. Doesn't matter which direction it goes because there is no bias. The overall bias really long term is up at the moment, but any second that could change. The problem is it's more likely to suddenly go bearish on the US, isn't it? Which makes this double bullish. So if you wanted to be super, super, super safe, you would just take longs on it. They're probably going to work out faster, but I don't think it's going to go up parabolic. I think it's going to go up with market structure. So it doesn't matter which way you get in. Same with all these USs at the moment. So all good. Morning, George, Chucks, how are we doing? So that's the Aussies. CAD Swiss we've covered, CAD yen, Swiss yen we've covered, euros. So euros basically at the moment are bearish. So we've had our first interest rate drop on the euro. So that was the 4.25. So inflation did pop up. So this is what they were forecasting, which is why they said they're going to do one interest rate drop, one interest rate freeze, one interest rate drop, one interest rate freeze, because they're forecasting this to be bouncing CPI because it doesn't come down in a straight line. It's come down very, very nicely, very quickly, but they were forecasting it to do that. So they decided to do the first interest rate drop and then see what happens with the numbers. And the numbers are going exactly as they forecast. So I have no reason to doubt Lagarde in what she says. So interest rates will come down like that. Yep, so you'll have a month with nothing and a month of drop, a month with nothing and a month of drop. As long as this thing keeps going pop, drop, pop, drop, pop, drop. Yeah, so it's just going to come down the same way. So the euro is bearish overall. I'm set short only on euro. I'm not taking any longs because it is a bearish stance at the moment on it. However, it's likely that because we've got those interest rate pauses coming in, that we're going to get a lot of sideways movement on it too. But any kind of bullish news on the other currency is obviously going to be able to push this euro around. So at the moment, I'm short only on everything, as I say. So I'm looking for RSI extensions to the upside, and I'm looking for ADR hits to the upside. So propulsion gap targets, ADRs, RSI extensions. As you can see, it's coming down and you're getting the bounces out of it. But it's going to be a lot harder to get out of longs than it is to get out of shorts. Shorts, if you scale into a short, it will come down very quick. If you scale into a long, you'll get into accumulations, which will be a lot harder to sort of scrape your way out of. So Euro odd, looking for shorts on. Same with the Euro CAD. Had some decent shorts on this one. One there. Obviously that dropped dramatically faster. There's a short there as well. Had to take 3 on that one. Short there, 3 on that one. So yeah, big propulsion gap targets to the upside. So there is a chance that we might come and undo 50% of this move on the way down. This one specifically is bear against bear because obviously the Canadians have dropped their interest rates as well. So there's a lot more chance for this to go into that type of range-bound move while we're waiting for some news to come. But overall, the market is bearish on it as well. So shorts on that one. Euro pound. I'm about to get out of this. I'm in profit on this overall. This obviously when I got, I'm undecided on this because I got into this here, and that was when that weekend was when the French Parliament went wrong, so we gapped down on the euro. Obviously, we haven't gone anywhere since then. So I've got out with some decent profit on 50% of this. I've taken some drawdowns as well, but overall, I'm in profit on the whole position. So I was waiting to see if we could break that high this morning at double top. And if we do, I think there's a good chance that we're going to run 125 ADR and do the gap fill in the next couple of days. And I'm just watching it. This is why I was saying I'm toying with the idea of getting out because I've got a break-even exit on it at the moment. And I've already made money on it. And it is bearish, but it's a bear against a bear as well. So the euro has dropped rates. The pound, we've hit our interest rate target. So we're definitely going to be dropping rates. It's not a case of if, it's a case of is it July or August. So this is going to go bearish as well. So if the pound suddenly goes bearish, this is going to pop. And we're waiting for Bailey to give us some confirmation of what's going to happen. We've got, I thought, we not got Bailey speaking this week? Yeah, there we are. I'm sure we had. So Thursday morning, we're going to get confirmation. I think this will probably have done that gap fill by Thursday morning, but we'll wait and see. Trying to get through. I want to see this pop that high and just get all the limit orders sitting here, or the iceberg orders sitting here. I want to see them pop and flip. I want to see that get through that level. And that will form, hopefully, then a propulsion gap which they'll be able to use to springboard up to that gap fill. But they're struggling to get through it this morning. We're really, really close. Let's see if it can get through. And then once we get through that level, if we get through that level, we've got this little high here and this little high here, which forms a resistance above. So we've got this double top resistance where there's going to be limit orders. Once we get through that, we're going to run into limit orders at this high, which is the gap down. And if that doesn't hold, it's gap fill. So it's a really nice, easy, profitable trade. 125 ADR. It's easily achievable today, if not tomorrow. It's just getting through this resistance. We just got to try and crack that. If they can get through that, we're off. But we're struggling. And the thing that worries me about it is if Bailey comes out and says August for the interest rate drop, the market's probably not going to go particularly bearish on the pound. And the euro, we know, is already bearish. So there's a chance of this just sticking here, which is why I'm wanting to get out, because I've got an exit right now. I don't want to be sitting in it for another week. Swaps on this are ridiculous as well. So if you look at the swaps on these euro pairs, yeah, 40, 70, 30, you know, it's expensive to hold. So come on, I was hoping you were just going to do it while I was waffling, but you're not, are you? So anyway, that's euro pound. So at the moment, it is both directions. At the moment, the EA is set up to trade long and short on euro pound, because as soon as we get that announcement, so from Thursday, we should have confirmation basically of this being bearish and bearish, which means it doesn't matter. Just trade it anyway. Any signal you get is basically tradable. Of the two currencies, the euro is likely to come down faster and harder, I think, than the pound. But we will have to wait and see. So at the moment, both directions. Come on, I really just want you to pop through that level. I just want to see them all flip. There's no volume today, is there? DAX. I'm going to hedge on the DAX this morning as well. There's no volume. There's just no volume today. I wouldn't call that a pop. More of a sleepy drive. But yeah, we're through. So we've got 15 minutes left. If we can break and hold, we're looking for that to hold, that high, that wick. Yeah, there we go. There's the pop. So we're through, the last couple of minutes. We've just done 50% of that candle. That's about poppy as we're going to get this morning, I think. So yeah, that's through now. So we're just looking for this weekly high to get broken. So if we can get a push up and hit that weekly high and form a propulsion gap up here of some shape or form, that gives us a good chance of getting that run today. So I'll hold that for the minute, but nothing's got any volume today, is it? Nothing's got any oomph. So Euro, New Zealand, this is very, very much more of a bearish pair at the moment. Obviously, Euro drop interest rates. New Zealand is potentially rising, definitely holding interest rates. So definitely bearish overall. At the moment, it's coming down pretty hard, as you can see, because of obviously the fundamentals are short. So I'm short only, looking for entries, RSI extensions. You can take double tops as well. RSIs, ADRs, usual stuff. Just looking for short opportunities. So I wanted to get it extended to the upside. Euro rallying so that we can get that mean reversion trade back down again. Euro US, this one I have on both directions at the moment, and I think I'm going to keep it that way for the time being. So longs or shorts on it. So at the moment, it's obviously not going anywhere, but I'm happy to trade this in either direction at the moment. We're just waiting for news on the US. So as soon as we get some news on the US, we get a big move. Then we get it undone on other news. So that was non-farm payroll. That was whatever it was before non-farm payroll. I think that was a CPI number or something. No, that was the euro interest rate. Yeah. And then obviously, so the US, when it has news, has the power to really move. And it doesn't matter how weak or strong something else is, the US will trump it. So long at the moment on this one, it's in profit. We're coming up into a propulsion. I don't think there's enough profit on there for me to actually do anything with it at the moment. Target set on that either. So go double top. So up in that propulsion gap, could well get up to there. If obviously the euro doesn't have any bearish news this week, it could just go neutral and sit around for the week. And if we get some bullish news out the US this week on unemployment, we'll be up here. If we get some bearish news, we'll probably be on a breakout to the downside. But it's got a lot of sideways in it at the moment. So just riding the waves. But as you can see, the overall stance, US dollar always going to be stronger than the euro, and especially now interest rates are dropping. If you want to be super safe on it, you're better off just short only, but I don't think it matters with this one. Same with the pound really at the minute. The pound. So pound is again a tricky one because we've hit inflation target, 2%. And we hit it pretty hard as well. Yeah, we didn't just hit it, we properly hit it, all on forecast. We have got massive interest rates at the moment and we haven't dropped them. I was half expecting them to drop them last week, but we decided to hold them. So we've now got another month of doing nothing on interest rates. So Bailey on Thursday is going to confirm for us, hopefully, when those interest rate drops are going to start. It's either going to be next month or it's going to be August. Not going to be any later than that. So we have got bearish news coming on the pound in the coming couple of months, within the next quarter. The Aussie is obviously bullish because it's already said it's not going to drop its interest rates. So this is a bear. I haven't changed the EA short only on the pound yet. I'm leaving it as it is. So I'm trading this in both directions, trading everything pound in both directions at the moment, because I don't think there's any reason why we should be doing anything different, because we haven't had any confirmation. At the moment, we are very much like the Fed in the Bank of England. We have not given any guidance really as to when we're going to drop interest rates. The market is speculating, but we've had no confirmation. So we're sideways. So at the minute, you can trade it in any direction. But as soon as that pound interest rate drop confirmation comes in, it's probably going to go more bearish. But that doesn't mean it's going to do that. It's probably still going to do that on the way down. The good thing about trading Australasian pairs against European pairs is you have all that movement during Asia, and then we actually make the big move, and then Asia kind of stops, and then we make the big move. So you get a good movement on this, as you can see, because we've got movement during Asia getting undone during London. So 2 different sessions, lots of different movement. So at the minute, it's got good upside targets. We've got a lovely quadruple bottom there with propulsion gap target to the upside. That's probably where it's heading at the moment, although it seems to be coming back down again this morning. But yeah, either direction. So at the moment, you've got longs on this, which first entry was there, and you'd obviously have scaled into probably 397. Maybe 3, more likely about 2. So you're probably sitting around a break even-ish or something on this at the minute. But that's a good target to the upside. If it breaks to the downside, obviously, you'll just have to use another propulsion target to the upside to get out. Pound CAD, very similar. I've got longs on this one at the moment, targeting propulsion just below those lows. So looking for a bit of a rally up into there. Again, I'll have to play out, wait and see what happens with this. Ideally, I'd like that target hit by Thursday. If not, going down. Pound Swiss, potential move to the upside. Obviously, the Swiss franc now, you can see the news there. That's the Swiss franc interest rate drop, which wasn't expected. It wasn't a massive move. If you look at the actual move that we got on that interest rate decision, it was an ADR. So market was shocked by it, obviously, because we weren't expecting it. And I would suspect that propulsion gap will probably hold. However, obviously, we've got until Thursday and then there's a good chance Bailey's going to do that. So and Bailey might do that, you know. We just don't know. But for me at the moment, obviously, you can see how strong the Swiss franc has been. That has changed. So I get the feeling that we'll probably undo some of these moves now and come up and try and test some of these propulsion gaps to the upside. But we've got news coming on the pound. So it's very hard to trade the pound Swiss as well because you've got something that we don't know the interest rate date drop on, and we've got something we've got no idea what the hell they're up to. So could do absolutely anything. Let me just quickly check that euro pound. Still holding above weekly high. We've got 8 minutes until candle close on that, until the top of the hour. Pound New Zealand. Again, the bias on this one should be short. New Zealand dollar, fairly bullish. Pound turning bearish at some point. As you can see, I got stuck in this long. The trouble is, it's just not going anywhere at the moment, the pound. So if the New Zealand decides to go on a sideways mission, you just can't get any movement on it. But yeah, bias should be short overall long term. I've just taken another long on the RSI extension from last week. And again, need to put a target on that one. God, got to get so much distance to make any money on this thing because its ADR is so low. Yeah, I mean, this low is holding very well at the moment. So if we can get through this propulsion gap, we'll probably try and test the highs either there or there. So target underneath that propulsion gap, 125 ADR. If I'm still sitting somewhere like that on Wednesday, obviously I'll shut it because the news is coming out Thursday morning. So, but long on that one at the minute. Pound US dollar, again, long on this one at the moment. Again, same thing. I've got a lot of pound exposure on, haven't I? Be a bit careful with that. So yeah, pound US. So again, pound US, I don't have a problem going either direction on that one. Same as euro US. It'll go up and down. It always goes up and down. It's the second most liquid pair on the planet, the pound US, behind the euro US. So just, yeah, it will go up and down. On news, New Zealand longs. I got two longs on this one at the moment. Very extended the New Zealand dollar because of the Canadian dollar weakness, and we had the New Zealand dollar rally. So I get the feeling this might come down a little bit more. I think there's a good chance we might even get sort of 250 ADR drop on this to test that support. We may just form a range off these lows as well, though. So at the moment, I've got longs on it. Don't have a problem being long with the New Zealand dollar. The only danger to this is if we get strength in the US, which will help the Canadian. But the long is there from last week. So not a problem with that. New Zealand, US, again, got long on that one, looking for a push up into there. Again, we're going to be focused on news for this one, but as you can see, it's very range bound at the moment. We've got a higher rising range low going in at the minute. We just about made a new high there, but it's just erratic. It's up and down, up and down, up and down. And as you can see, a lot of it is based on news. So news, undo. It just undoes everything. So don't have a problem with this in either direction. And it was an extension to the downside on... I'm going to get into this then. Got out of that long there. There. Just triggered an entry, which I've been in for 6 days now. So yeah, just stuck at the minute because it's not going anywhere. But looking for a push up into propulsion up here. So come up and retest and keep this range. Retest that high. If it drops, obviously, it'll scale in and wait for the next bullish news or bearish news on the US. US dollar CAD, absolute dream at the moment. Got out of the last long on Friday. Just a quick scalpy move. Was worried about the triple witching side of things. So on Friday, saw these whacking great wicks going in. So decided to exit the longs from that entry. Target was propulsion. Glad I exited, but it's no problem going long or short on it at the moment. As you can see, every single trade on this is either a single or a double. Straight in, straight out. Really, really easy to trade at the moment. Just no bias. So just whatever. Get in and it drops. Just scale in and it will pop at some point on news. So it's a lovely dream to trade at the moment. US dollar Swiss we're covered and US dollar yen we're covered. So that's everything. All covered. Let's see if that holds that level. I'm pretty sure I'm hedged. Yeah, hedged on the DAX. So targets on the DAX today. What should we do with the DAX today? We are at the Thursday, Friday high right now. If it breaks that, there's a lot of potential areas on the way back up. That's a good target, just shy of ADR today. So that previous support and resistance is just shy of ADR. So three. So I'm going to put targets just below those highs to the upside. Downside targets got to be the lows. There's a lot of them. I'm just going to go with Friday low. But we're really struggling on this DAX again now. It's had really good opens, the DAX, over the last week or so. Really nice and strong movement. But today, obviously, really weak. So such a shame, that range. Look at that range. 87, minimum range 89. If that had been 2 pips higher on its pre-market range today, or its opening range today, I'd have got a trade on that. 3R, straight up. Beautiful. Maths. Never mind. Let's just catch up on the chat. England are definitely going bust. Morning, Franco. In the Euros, yep. Highly likely. We didn't do very well at all, did we? Well, we did. I was chatting to my mate about it over the weekend, and when you actually think about it, we're not doing bad, are we? 1 win, 1 draw. Pretty average. Yeah, not playing very well, but that's why we got a draw. So we need to do some jigging with players, don't we? Basically, few weird decisions, but you know, this is what tournament football's all about, isn't it? It's a complete lottery. But one good thing is the people that come out the starting gates and fly never win the tournament, do they? So got that on our side. Do you trading in any prop firm funds? Yeah. Well, I've just gotten back into an FTMO evaluation, which is done 4.76. I'm not trading any live funds at the moment. Mind you, there's no such thing, but I'm not trading any funded accounts at the moment. I just started an evaluation just because I was bored, basically. So, but yeah. So basically, if we get that intervention on the US dollar yen at any time in the next day or so, if it happens, I've passed. If it doesn't happen, it's going to hurt. Well, not going to hurt. It's going to cost me it's going to cost me 1%, I think. 1.1% or something. Morning, Lippy. Morning, Sati. Morning, Abdi. Germany yesterday wasn't that good as well. Yeah, I didn't see the matches yesterday, any of them. I was out on a massive, long bike ride over the mountains. No, the mountains. We haven't got mountains. But I was mountain biking yesterday, so didn't actually see any football at all. Managed to do a 5 hour ride. So slept well last night, although it was too hot last night. We're actually getting a heat wave in the UK. 3 days of heat, and it'll start raining again. Yeah, so that's basically what I'm doing on prop. Not a lot at the moment. Just waiting for stuff to move today. Oh my God. So they didn't manage to hold the highs at the moment. We'll see if we can form a propulsion move here. So obviously we've got a big buy candle. That wick there is where the buyers couldn't get through last time. They slammed through it this time. So if the sellers that push that back have flipped long, they will add into their positions at that point and we'll get a push out. So if we do that and we can break that high, we're off to the gap fill. If the sellers have just been overwhelmed, basically, buyers rather. Yeah, this is why I'm unsure whether to just scrap this euro pound at the moment. It's a gap fill though. Gaps get filled, and this gap is now 2 weeks old. So you know, the fact that it's not going down means I reckon they want the gap. So you know, we're 1.25 ADR away from it, Mr. Banks. Do it. Get it done. Don't hold me in suspense for another week, but we'll wait and see. You mentioned system permutation test a few times. Do you have a video on how you do that? No, it's just literally, it's the back tester. So you go into the back tester, you click optimization, and you select what parameters you want to test. So single trade target, I want to be between 0.5 and 4%, and I want you to move in 0.5% increments. So that literally is it. I mean, it's just, there's no point in doing an optimization video. There's hundreds of them out there on YouTube. Don't need me to do a video on something that's got complete coverage out there. There's a manual on MetaTrader on how to do it on their website. So it's just optimization. MetaTrader call it optimization. I think that's a really, really bad term. You would really be better off calling that curve fitting. But all a system parameter permutation test is a fancy way of saying optimization. So I'm testing permutations, different variations of this system parameter. Percent of account for single trade to start drawdown control. Show me what would have happened if I'd have chosen 0.5 and 2 and all the half increments in between it. And that gives you 1, 2, 3, 4 permutations of that system parameter. System parameter permutation test. Yeah. And when you do a test with 2 system parameters, you get every possible combination of that parameter and all of the different numbers. So the more parameters you choose and the more permutations of each parameter, the bigger the number of tests. So this particular system parameter permutation test here, I ran on Friday. What's the date? 21st. So this particular system parameter permutation test, I tested the lot size, distance between entries, single trade target, position trade target, and when I should close the positions out. Yeah, so this was another RSI2 test that I was running. Yeah, so those ones in bold there, those 5 parameters are the test criteria. All of the variations of those give me 4,096 permutations. Yeah, so there's 4,096 individual tests run with those 5 parameters. And out of those 4,096 tests, 3,531 of them are profitable. Bloody good. So that's what you class as robust. If you test 4,000 different variations of a strategy with 5 different parameters, and 3,500 of those 4,000 times over 10 years, you are profitable, you got a decent strategy on your hand, haven't you? Actually, that's not a 10-year test, that's a 4-year test. Yeah, that's a 4-year test. And then you basically just analyze the results. So how much drawdown would each of them been in? How much profit would they have made? How many trades were there? What is the performance factor? I use return on drawdown. This is a manual calculation, but it's basically how much return you get from the drawdown. And you just basically analyze this data. So all you're looking for is what makes me get the lowest drawdown. So sort by drawdown, smallest to highest. And you can see that using a 1 or a half lot entry will give you lower drawdown because you're using lower risk. Adding your trades, any variation really between half, a quarter, 1.5, 1, whatever. Yeah. Single trade target, low targets of 0.5% are best to use to get the lowest drawdown because it's a scalping strategy. If you get out faster, you're obviously not going to give those trades time to go against you. Therefore, you get lower drawdown. Flip it on its head and go, right, well, what happens if I go largest drawdown? Well, using bigger lot size gives you more drawdown. Adding your trades closer together means you get more trades. So the trades that go against you have got bigger lot size on, which gives you bigger drawdown. Having your targets set further apart means the strategy makes it a lot harder to reach the targets. Therefore, you're not going to get to the targets before it turns tail and runs and hits your losses. More drawdown. Strike rate will be lower as well. Again, higher targets. And start your drawdown later. So instead of waiting for 1 ADR of movement against you to get out, wait for 2 ADR movements. So give it more room to build up more positions that go against you and cost you more drawdown. Yeah, it's just a case of analyzing the data to find out what impact has what. It's not, and this is why I keep saying to people, it doesn't matter. There's 3,500 variations of this particular test that I've done, which come out profitable. What's the best one to use? Don't know. What do you prefer? Do you prefer lower drawdown? Do you prefer higher drawdown? Do you prefer bigger profit? Do you prefer smaller profit? Yeah. Find a setting that gives you roughly what you're looking for. But none of this is going to ever happen in the future because this is a test on the last 4 years. The next 4 years aren't going to be the same. They're going to be totally different because there's no 2 days are ever the same on the FX market. So you're never going to get the same movement. These stops and TPs and everything are never going to trigger. The ADRs are going to be totally different. Yeah. All it's giving you, a system parameter permutation test, is what impact does having bigger lot size have? Bigger drawdown. What impact does close entries have? More drawdown. So if I have wider entries, what happens to my drawdown? It drops. I like low drawdown. Okay, so you do not want to be using a quarter of an ADR to add your positions. You want to be using a half an ADR to 1 ADR. So you can filter it and say, right, just show me the results then with 1 ADR apart. Oh, look, the drawdown is still high there, but if I want to get that drawdown lower, what I could do is go for a smaller target because it was targeting 1, 2, 3% return. So if I just go for 0.5% on every trade, my drawdown will be tiny, but I'll still return 15 grand off of a 2 grand drawdown, which is an 8.3 return on drawdown. Anything above 4 is pretty much the holy grail. And if it only produces 2 return on drawdown, half of what the test over the last 4 years did, holy crap, you've only made twice as much money as you risked. That's all system parameter permutation testing is designed to do. Give you a rough idea of, is this robust or not? And the number of tests you do. So if I run this test now, you won't be able to see the numbers down there because it's out of screenshot. But that will do 4,000 tests. 4,000 and what was it? 4,096 tests. Yeah. So that is testing that parameter, that parameter, that parameter, and that parameter, and that parameter. So there's 5 parameters being tested. If I add another parameter into that, so if I add RSI in and say test RSI 2 in 1 increments up to RSI 10, yeah, and run that test, that 4,096 variations now, when it starts, will turn into probably 36,864 tests, which is going to take 30 hours to run. 24 hours, that will change. But so that's now running 36,000 tests just because I decided I want to put this into the equation. Take that out of the equation. Now it's running 4,000 tests. 4,000 tests doesn't take 20 hours to run, 20, 30 hours to run. That will take something like 2 hours to run. There you go. There's the video on system parameter permutation testing. That's all it is. That takes 1 hour 53, look. So all I ever test when I'm doing SPP tests, I'm interested in what parameters affect drawdown, what parameters affect profitability, what parameters affect strike rate, which you can kind of tell from the testing, but which you will get, you will be able to find out. But and then when I've run a test over 4 years, which is my initial test period. So my initial test period is post-COVID. So I want to test what would have worked post-COVID. Then I go and do the same test again pre-COVID for 6 years. So I get a total of a 10-year test. Yeah. And if the system parameter permutation tests gives me roughly the same there than it did there, it's robust over the last decade. It's never going to win every year. You're always going to get years where the market conditions are just not right. But you're looking for something that works the vast majority of the time. That's it. Robustness. Trading is not about finding the right combination of indicators. Yeah, there's 4,096 combinations here. Yeah. The only indicators, the only things that are changing in here is how much risk should I use? How much distance should I have between my trades? When should I get out if I've got one trade? When should I get out if I've got more than one trade? And when should I close it when I'm wrong? That's all I want to know. What's roughly the best thing to do? There's 3,500 things that you could have done that made you money. Which one do you pick? I don't know. That is the key for me. Return on drawdown and actual drawdown. So for one instrument, if it's below 10% drawdown, I'm happy with that. Remember the rules on exposure. Yeah. So this test was done on the US dollar CAD. So if I had 2 US dollar exposures on, and let's say I test US dollar Swiss and I test pound US dollar, wherever that is, there, right? And if all 3 of those can give me a good return on drawdown and yet hold a drawdown lower than 10%, it means that I could trade 3 US dollar instruments at the same time. And the very worst case scenario I achieved over 10 years was a 30% drawdown on my account. If I test US dollar CAD and it's 10%, and then I test the pound US dollar and the US dollar Swiss, and they both to get with those same settings, I'm picking the same settings, whichever one I've picked, and one of them gives me a 52% drawdown, and the other one isn't in the list because it's one of the 400 odd, 470 or 500 odd, whatever it is, that didn't actually produce a profit. That setting's not good to use. So it's about then filtering down and finding a setting that you are comfortable with that works across multiple instruments. You will never get the same result on the US dollar yen, and you will never get the same results on the US dollar Swiss. Yeah, because the yen and the Swiss pairs do not move the same, as we know. So always in all the backtesting I've done on any strategy, really, you'll notice that the yen will give you completely wild results, and so will the Swiss franc, because they are erratic currencies. So to be totally safe, if you eliminate those from your portfolio and just focus on the majors, the Euro, the US, the CAD, the Aussie, the New Zealand, you'll be safe. because they are always being pushed and pulled and pushed and pulled and pushed and pulled on news. The yen, we don't pay any attention to news. It never moves on news. It moves on safe haven runs. The Swiss does whatever the hell it likes, very rarely moves on news, but does move on safe haven runs. Yeah. So take the safe haven currencies out of the equation, you're left with a stable number of currencies, which you will find a decent system parameter permutation test will give you a good result on across the board. It's going to be wildly varying, yeah. But you know, look at this. I mean, let's say, for example, I want to pick something that is. I would always go by return on drawdown, so largest to smallest. So it ranges from 8 down. You know, going hundreds of tests in here, and we're still 2 return on drawdown. So we're returning double our risk. Drawdowns here are 11%, 12%, 7%, 14%, 24, 28. That would have been a scary time, wouldn't it? But you're returning 51K, 53K. So what you will always find in system parameter permutation tests, 90% of the time, the bigger that number, the bigger that number. Yeah, the smaller that number, the smaller that number. With lower risk comes lower return. With higher risk comes higher return. So the argument is, all right, well, if I can return 50K the vast majority of the time by going into 15 to 25% of drawdown, is it better for me to pick 3 instruments that all produce very decent returns, but are going to go into big drawdown? Or would I trade more instruments with low drawdown of 6%, but they're only going to return somewhere between 8 to 15K? But because I'm trading 3 times as many instruments, the return is the same. But then you multiply that by 3, and you'll probably find you'll get a similar-ish drawdown. Which makes it, this is why I keep saying it, which do you pick? They all work. If you've got a robust strategy, which the RSI2 is. This is all done with the Position Trader EA. So this test here, the one that I'm running right now, which is giving these results, that's that test, basically. So this is using the Position Trader EA. Yeah, and it's testing RSI2 on, this is using the 4-hour time frame. So basically I'm saying if the daily RSI2 is extended, I'm running on the 4-hour time frame. So if RSI2 is extended, on the 4-hour, we get a signal to go long, and I'm using the moving average. I'm using the 2 SMA. So this test, what I'm doing here, is basically saying pretty much, give me a bull candle. Because I'm using the 2 moving average, which will be hugging price. Literally, it'll be hugging the candles. So what I'm saying is, if RSI2 is extended, yeah, next sign of bullishness on a 4-hour time frame, get me in. If it doesn't work out, no problem. Scale me in a quarter of an ADR apart on a bull move. Yeah. So that's what that test is doing. But it's not dissimilar to the tests I've run on the hourly time frame. However, there's a lot less trades. So the 4-hour time frame gives you lower drawdown than the hourly time frame. But it also returns lower because you've got less positions on the ones that work, which make you an absolute fortune. All swings and roundabouts. All you're looking for is stability. You're not going to get the same results. You're going to look for something that's stable, that consistently returns money, because you're never going to know which setting to use, because it's just going to be different every time, isn't it? But there you go. There you go. System parameter permutation testing in a nutshell. The dumbed down version. So with these prop firms, you pay before the evaluation. Yeah. Remember, how do you know about prop firms? I've been talking about prop firms in here for about 4 years. If you fail, the money is gone. Yes. It's gambling, basically. Basically, prop firms, you are buying a demo account. So this basically is a £140,000 demo account that FTMO have given me. I pay them 900 and something euros for it. And basically, if I pass stage 1, which is an 8% target, 10% target, 8% target, whatever the target is, they go, well done. You didn't hit any of our loss criteria, so you didn't go over 5% drawdown on one day, and you didn't go over 10% drawdown on the account. Here's another demo account for free. Do it again. And then you go, there you go, I did it again. Okay, brilliant. Here's another demo account, and pretend it's real. And what happens is if you get to, after 2 weeks, a profit level and you'd like to take that money, let us know. We'll evaluate your account and see if we fancy paying you. And we'll use all the money from the idiots that are trying all the EAs and robots they've bought for $1,000 to pass prop firms for them. We'll use all their money that they've lost and we'll pay you some of it. That's prop. Just a con. The whole lot. It's a scam. It's not a scam. It's not. That's a wrong word. It's just not real. Yeah. It's pretend. Like binary options wasn't real. Yeah. They were saying, here is a chart. Tell us if it's going long or short within a time scale. And they would then manipulate the price up and down. They would see how many picked long, how many picked short. And the people that picked long, if there was less of them, they would take it short. And everybody that won short would win less money than the long guys lost. So they pay the short guys with the long guys' money and tell you that that was real. All a con. This is basically binary options 2.0. It's lasted for 3 or 4 years. It's doing very well, but it won't last long. So get on the bandwagon now if you can. It's a bit of fun, but don't ever try and make money out of it long term. It's not going to happen. There's too many rules, too many regulations, and there isn't a strategy on the planet that can survive long enough to get paid out regularly. Yeah, market doesn't work that way, as you well know, probably. Franco. Yes, Themba, yeah. Morning, Ismet. I've passed a 5K prop. Got an email. They are not amused by my lack of stops placed. There you go. But let me continue. Using stops now. Saboteurs, yeah. It doesn't matter what you do, right? There will be a rule in the terms and conditions that can stop you being paid. Yeah. And the problem and the thing that I find annoying with it is it's time. Yeah, they are taking your time. So everybody that wanted to learn to trade and has been learning to trade for many, many years has been doing very well, making progress. And then prop came along and they went, I can get 200 grand. Ooh, I'll have a go at that. Now everybody's obsessed with prop. Nobody's trading the strategies in the way that they will work because the prop have got completely different criteria to a normal trader. Me, for example, I don't care if I go over 5% drawdown or 10% drawdown on my account because the market requires that for me to make money. Yeah, I can't specify when the market, this euro pound's bouncing, look. I can't specify when the euro pound is going to do this. And now if the euro pound does this and goes all the way down to there, I'm going to be in drawdown on it. This isn't in my control. My strategy is sound. It's been working for a long time. But my strategy isn't sound within a 5% daily drawdown or a 10% monthly drawdown. Yeah, I started this month on a 9% loss. If I was a funded trader, I'd be dead. They would have taken my account away from me. What I did as a trader is I turned that 9% loss into a 1.3% gain, and I've still got a week to go. Yeah, because I'm a trader and I can use my capital to trade with. Prop, you can use the demo account, fake capital, to work within their rules. All of their rules are designed to be confined within market movement they know is never going to be consistent. There has never been a strategy out there that has never drawn down by more than 10%. If there is, I will buy it for £20 million off of you right now. But I need 5 years worth of proven trade results. Can't give it to me? No, funny that, isn't it? Because it doesn't exist. Because every strategy is either range bound, trending, or breakout. The market never spends long enough in those conditions for your strategy to work without finding a loss. Every range bound strategy will work while it's range bound, but at 20% of the time, it's going to go into breakout and trend. Your strategy is going to fail 20% of the time. It will draw down 10% of your account, 12, 15, 20% of your account before it then starts to produce the 50 to 100% return for you, because that's what the strategy does. All strategies do that. Look at this robustness test I've just shown you. It proves it. Yeah. With this strategy, this particular strategy, there's 4,096 times I've tested it. There was about 500 times it didn't work. Yeah. Prop will make sure that those 500 times are within those rules. because they know it's not going to work all the time. It can't work all the time. Yeah. Prop companies are making $10 to $20 million a month in evaluations. Go and look at their payouts. Look at FTMO's payouts. There's no payout proof page, is there? It's just testimonials, I think. But there's lots of interviews with these types of people. Yeah. They took the time to make a YouTube video for Pepe, who at the age of 19, yeah. How many 19-year-olds do you know that earn 76 grand a month that aren't footballers? Pepe? I don't know. But yeah, right. He made 76. So they took a lot of time to make this video with Pepe from the Netherlands. First of all, prove he's real. I don't know. Secondly, 76 grand out of what? 20 million? And he is the one. He is the one this month that managed to get that trade on. What did he do? He went short 4 lots on the US dollar yen, right? And he put a load of pending orders in the market just before the intervention happened. It dropped and he was out of that trade within 4 hours and he banked 76K. He's 19 years old. Do you think he was lucky or a skillful trader? Yeah. Everybody can gamble and go red or black and make a hell of a lot of money. I can do the same thing very, very quickly and easily. But you're not going to do it consistently. Yeah. There's no monetary amounts on here, but anyway, make your own mind up. I may be being overly skeptical, but I've been around in this industry a long time and I've seen a lot of this stuff. And it's just, it'll disappear because it can't be there. It's just a mechanism. But it's legal. This is the thing. They're not saying now, all of these companies like E8 now, E8 funding, yeah. Please note that all accounts we provide to our clients are demo accounts with fictitious funds and any trading is in a simulated environment only. They now all have to say this because my Forex funds went bust and got caught manipulating price. Yeah. Total payouts, 35+ million. These guys have been established since 2021. So let's take 20 million, times that by 12, times that by 3, and then take that off of it. Who's making money in this industry? Them or the trader? Yeah. Imagine making just shy of $1 billion in 3 years and giving 35 million of it to people that actually managed to get a payout. But I did it. I've done it. I've been paid many times by many companies. Specifically, my Forex funds were fantastic. I made much more money out of my Forex than any of them. But, you know, they all disappear. If you've been working really hard for 3 months of your life to get funded, and then you get that account, the first week of that, it goes into drawdown, you will panic. Because you're like, this is taking me 3 months. I can't lose it. And that will completely change the way you trade that account. You won't trade it the same way as you did when it was a demo, because now it's real. Yeah. Have you ever traded a $200,000 account ever in your life? No. What makes you think you can suddenly go, oh, I can do that? Can't. It's totally different. Totally different mindset. Unfortunately. But it's just the way it is. I've got some money I can bank. Hang on. Yeah. But don't let me put you off. Just don't do big ones. Do small ones. I was going to do a video. It came to me last night, actually, this as an idea for a video. Basically, so if you go to Robo Forex, or there's a few other brokers out there, they do these things called cent accounts, basically, where you can, it multiplies your money by whatever it multiplies it by. It's a cent account, 1,000, 100, I don't know. But whatever you put in there, that should be 100, wouldn't it? Because it's a cent account. Wake it up. So basically, I had this idea. Instead of paying, right, do the maths on this. So an evaluation with FTMO costs you pro trading. Let's say we want to go for $100,000 account, right? It's going to cost you 540 euros. Instead of giving 540 euros to FTMO, do this. Go to Forex, sign up on Forex, and put 540 euros into that account. But get a cent account. That cent account will turn that 540 euros into 54,000. Yeah. So you are now trading the equivalent of a 50K account. Run this and do not let your daily drawdown go below 5%, and do not let your monthly drawdown go below 10%. If you can do it with your own money 3 times in a row and produce 8% profit 3 times in a row, yeah, basically what you'll have done is you'll have kept hold of that $540, euros, whatever it is, increased it by 24%. So you'll now have $600-700 or whatever it is, 600 euros. And you'll have proven to yourself that you can stay within the evaluation rules with a prop firm, and that you have a possibility of making it as a prop trader, right? Then do another month of that. And when you've done 4 months in a row, go and buy an evaluation. But if you buy an evaluation today, I can guarantee you within weeks, days, you'll have blown that somehow. Something you'll have done wrong. You'll have blown it. And you'll have bought another one. So immediately you'll have spent 1,000 euros in this case, or dollars. All the prop firms are priced differently. But you'll have spent 1,000 of whatever to try and get hold of that 100K. Yeah, if you get that 540, put it in a Forex account, and suddenly that balance drops down by 54K, $54. So it's dropping down to, say, 480 euros now in your account, which would be the equivalent of 48,000 in a cent account, right? What have you lost? $40. You've also proven to yourself that you can't make it in prop at the moment. So now take that and start again, and keep starting again. Yeah? And when you can do it, go and buy one of these. But until you can buy one of these, don't buy a demo account from these guys. Use your own capital, 100x it, and pretend it's 50K. Much more fun, isn't it? Saves you a load of money as well, because over 99% of people don't get through the funded stage. So make sure you're one of those 1% before you buy it. Have you passed my prop? No, I'm still going. 4.7 up at the moment. So getting there. For US clients, they changed leverage, raising the entry cost, bogus freezing, lagging platforms, combat for Americans. Yeah, this is the trouble as well. Like I said, there's always a reason and a way to stop you passing evaluations. Don't forget, these are demo accounts, right? So a demo account you will find will freeze up a lot more than a normal account. So you're going to get platform freeze with this because it's not accessing the real market. It hasn't got the infrastructure behind it for real market. Whereas with my Forex accounts, I don't get disconnections. On my demo accounts that I run when I'm doing testing on EAs and things like that, they drop out all the time. And you know what? The spread is also way tighter on a demo account. Look at the spread on this account, right? If you look at Euro Pound on a demo account now on Forex, it'll be like that rather than like that. Gives you the best possible trading conditions. So on that account, when you're doing your evaluations, they want you to get through the evaluations to give you hope. If you fall at the last hurdle, you're like, I was so close to getting hold of 200 grand. And then you'll do it again and you'll fall at the last hurdle and you go, oh, so close to getting 200 grand. You do it again and then you'll get to funded stage. All of a sudden the trading conditions become real. Achieving that is now a lot harder. Yeah, it's just, it's geared for failure, unfortunately. But there's a lot of them out there. Go and fish around. There's the prices vary a lot. You can get 200 difference in the entry price, but read the rules. There are rules out there that are designed to stop you making money, especially as I'm finding with FTMO when I've been reading their terms. We went through it before, but they've got some rules that are so woolly, a sheep would turn around and run away from them. They're that bad. The definition of what they allow and what they don't allow. Look, personal account, inconsistency, stagnation. FTMO account, focus, discipline. No, shut up. I'm a serious trader. Look how many monitors I have. This guy on a laptop, no chance with one monitor. You need at least 8 monitors if you're a professional trader. I have one. I'm never going to make it. I'm an affiliate of theirs. I'll probably get kicked off now. That's a great video. I've not seen that before. Anyway, come on, Euro pound. Let's go. Right, that's all I've got for you today. There's not a lot else to discuss today. There's no news. So we're just sitting around waiting for that at 9 o'clock. Oh, it's gone. But it obviously didn't do anything, did it? So that didn't do anything. Macklem is speaking this evening. We've had Macklem speaking after the interest rate drop. So there's nothing that's going to come out of there. I don't think that's going to make any difference to the CAD this evening, but we'll see. So your first news this week is tomorrow, which is the CAD CPI. And again, whatever he says today will be, we'll wait and see what happens there. So we'll wait and see what happens. But that's your main news tomorrow. So tomorrow I'll be on at 2:15. We'll trade the New York Open. Have a look at what's happened to the CAD interest rates and just see if anything is moving anywhere. But we'll wait and see. Could you set up your own prop firm with what you explained and let people keep their money, but actually find good traders to fund with real money? No. Nope. You can't. The business model doesn't work, does it? In that way. If it was a case of you could do that, they would all do that, wouldn't they? A lot of the brokers are jumping on the bandwagon now, offering prop as an option, but it's the same. It's the same business model. Yeah, the business model is I have to have rules, and my rules have to be tight. Go and look at DarwinX. Yeah, so DarwinX have the equivalent of prop. Called a Darwinia or Darwin IA. Yeah. So if you go and set up a Darwin with DarwinX, that is the proper equivalent of prop. What you're looking for is people to fund your trading by you proving your track record. But you have to be doing that for 3, 6, 12 months, and you have to have a strategy that has a risk tolerance low enough for your investors to invest in you. No investor is going to invest in someone that risks 10% of their account in a month. Yeah, not going to happen. Yeah, if I'm a multi-billionaire and you want 5 million of my money to invest, you're telling me that I might lose 500 grand. No. 50, yeah, I'll be happy with. Yeah, and I want you to return me $250,000. Yeah, I'm going to give you 5 million and I want you to pay me $250,000 this year. That's what investors are looking for. That's what prop firms are looking for. Low risk, low return. Yeah, look at my spreadsheet. Sort by drawdown, lowest. Yeah, if you can do a 3.57% return or a 4.16%, you probably can't see it, can you? return on my account, yeah, you can give me that as a drawdown and return me that, I will give you my money. But if you're telling me that you're going to draw down into my account by anything more than 5% in an entire year, I'm not interested. Yeah. Prop give you that on a daily basis. Imagine an investor giving you 500 million and you saying, all right, no problem. Tolerances are roughly 500,000 a day. What? Piss off. Not interested. Or 5 million, you know, it's just not going to happen. So that is a stable, good, solid strategy. Yeah. Fixed risk, we've got fixed drawdown, we've got fixed returns, but it's small movement, which is achievable with a high strike rate of 80% plus. That's what they want. They don't want risk. But the drawdown on that will be over a long period of time. Yeah, it's not going to, it's going to gradually have these drops, but the drops are going to be small. That's what they want. You just won't get it on prop. Too hard. But Darwin is the closest thing you'll get to a proper prop firm. But the funding, you'll be 12 months in, right? And you'll get funding, which is enough to pay you maybe a couple of grand a month. That's it. I have 2 monitors. I expect my profits to be double. Yep. I've shown you the pictures of my monitors, haven't I? I think before. Can't remember where they are now. But my old setup. Which was lovely in my old setup, but I don't know where those pictures are gone now. But I used to have many monitors, but you only look at one, so it's pointless. Pointless having many monitors when you don't look at them. Don't know where my pictures have gone. I can never find them. No, never find them. Right. Anything else for anybody? Basically, a broker with the option to offer funding. Yeah. I think it would be a good idea as it promote against all the crap. Yeah, but you're missing the point, Harold. What's the point of me setting that up? I'm not going to make any money, am I? The whole prop business model is let's make 20 million and give a million of it back to anybody that's lucky enough to get themselves over the line. If I set up a prop firm that says, this is really hard, you're hardly ever going to make it, this is a complete scam, basically, all we're going to do is use this money to pay you back. But if you're a really good trader, I will become financial conduct authority approved, costing me £1 million, and then I will give you some funds that I haven't got, which I need to find investors for. How am I going to make any money? You will find real traders, Harold. Show me some. Find me some. That's the old ethos of the prop firms, yeah. Prop firms in the old days, the proper prop firms used to have, 5 or 10 desks with traders on, yeah? 5 or 10 out of 25 million that did a test. Don't forget the payout on prop, yeah, is less than 1%, right? So even good traders like me will not stay within those rules. Yeah, look at my account here, right? I'm on 4.76% at the moment. Yeah. If this all goes wrong, it's going to cost me 5,900 of my 6,666. That's not a good number, is it? Anyway, so that today, if all 5 of these trades go against me, that's back to zero. I've got a bloody robust strategy as well, as I've just shown you. I've just shown you many robustness tests on this. Yeah. There's only 3 strategies on the planet that work. So I only want 3 traders. I want a really good trend trader. I want a really good mean reversion trader. And I want a really good breakout trader. Because you're all going to take trades roughly the same because there is only 3 strategies on the planet. Yeah. So if I have 3 traders come to me with those strategies and I fund them, and then another 3 come along, yeah, and that mean reversion trader and that mean reversion trader, yeah, you do a comparison on their trades. They're going to be very similar because they're both doing the same thing with the same risk profile. So if I fund both of them and the market goes into a range, goes into a trend, both of those start losing me money. It doesn't work. That's why it's not real, because it doesn't work as a business model. The prop firms, the decent prop firms in London, yeah, when you go and sit at their desk, they will ask you to trade their strategies because their strategies work. What they want you to prove is that you can trade their strategies with decent risk reward and not go tilt. Yeah, go and look at the firms out there that offer coaching. All prop firms will offer coaching. Why? Because they need you to make sure that you are doing everything in their rules, the way that they want it done, which is the way that makes money. So you're going to be trading the same strategy. There'll be small variations in it, like a system parameter permutation test. I'll press the buy button on that strategy. He'll press the buy button 2 days later on the same strategy. We'll both either be right or wrong with slight variations. But we're both trading the same thing that we know that works. Your barrier now is capital. Exactly. That is what the prop firms are playing on, isn't it? Yeah. I want to become a trader. I haven't got the capital. Tough. I want to open a shop on the high street. I haven't got the capital. Tough. I want to become a solicitor. I haven't got the capital to put myself through the training. Tough. I want to become a pilot. It costs 125 grand to become a pilot. I haven't got it. Tough. You want to become a trader? Get capital. Tough. It's basically the rule. I'm not making it up. That is how it works. If you haven't got access to what you need for your job, you can't do your job. If somebody promises you access to the capital, in this case a prop firm, to be able to do your job, brilliant. But there's a caveat. You can't do your job because we're going to constrict the rules down, because the way that you make money in this market, as you know, is not by trading within the rules of a prop firm, because that's not how it works. Tough. Yeah, I'm not being harsh. I'm being real. This is what it is. If you haven't got money, you can't make it in this industry. Yeah, 97% of people fail in this industry, or 95, or whatever the statistic is. The reason they fail is not because they're not good traders. It's because they've got 5K to trade with and they've got a mortgage of 2K a month to pay. Somehow they've got to try and extract 2K from 5K. You can't do that consistently. It is impossible. Nobody can do that. Yeah. If a central bank was to give you 1 million to trade with, and they said to you, I want you to come back with 450K profit this month, yeah, it would be impossible. Can't return almost 50% return. A prop firm is asking you to return 8%. Yeah, 8%. Doesn't sound like a lot, does it? Yeah, but you can't do that consistently with any type of high risk. Look at my month this month. Yeah, I've made 10%, just over 10% this month. 10% profit this month I've made. I started with a 9K loss in week 1, or 9% loss in week 1. I'm sitting on 1.3. I've actually made a 10% gain. But it's taken me a month to do it. But I had to draw down by 9%, and I've had to hold drawdown way over 5% to achieve that, because you can't just get in and get it right. It's impossible. It's not impossible. It's lucky. If you get that right, if I go short now on this triple top and it works, that's luck, because I can't control the candlesticks. It's lucky that it did that. If I'm unlucky, it will go that way. It's probably because I've got 666 in my P&L at the moment that this is all going to go wrong today. I'm not superstitious, so it's nothing to do with that. But anyway, you know, you got to be real about this. Yeah, it's, if you want to trade for fun and trade for a part-time income, that's not an issue for virtually everybody. It's the same as having savings. If you put 20,000 in an ISA, right? You could take that 20,000 and put it in a trading account, yeah, and trade with that, and you will get probably a better return than you will on an ISA if you're a decent trader. But if you want to make a living that pays a mortgage, it's a totally different kettle of fish. It's a job, isn't it? And with a job, starting your own business comes capital outlay. Like I say, with a shop, if you want to open a shop selling anything on a high street, you need 50 to 100 grand for stock, premises, outfitting premises, staff, working capital. Any business you start, you can't start it for nothing. This is no different. Capital is what you start with. Any futures or options strategy, you know, buy it. If it goes up, sell it. You can position trade. You can't really position trade in options and futures because there's the FIFO rule. So you could, but you'd have to get out of everything the same day. Opening range breakout works in futures. Price action works in futures. But within futures, you've got to have decent risk reward and scaling. So you've got to be able to, with futures, you've got to be able to get into multiple positions. So you've got to be able to build a position. So, you know, order book trading. It's all the same stuff, though. I've said it many times. Order book trading is support and resistance. If you look at an order book on this, yeah, you'll have basically a whacking great bulge there, a little bit there, and then a dip, and then a whacking great bulge there, and a bigger bulge there, a dip, and a bigger bulge there, and then a dip, and it will go down like that, right? So right now you should be shorting it from this bulge, and if this bulge breaks, you're going to long it up to that bulge. That's the big orders. That's the big orders. This is the void in between. So when it gets up to there, you sell it. When it is here, you either sell it or you take the breakout of this and your stop goes below the bulge. Yeah, simple as that. Again, it's all to do with risk and luck. So you risk is that. Your reward is getting to that bulge. But if it doesn't get to that bulge intraday, you have to close your position somewhere in the middle, which is why futures is hard, because where you think it's going to get to, quite often it will take longer than a day. You can't hold overnight in futures because the cost is too high. The overnight swap's too high, so they make you shut your positions by end of day. And if you don't, they blow your account and you have to reset and start again because you forgot to press the close button because you were walking the dog and you forgot the market had shut. Oh dear, never mind. Give us another X and we'll try it again. Rules. But it's all the same stuff. Futures, it's the same stuff. But the rules in futures, because everything works on a tick level and every tick has got a fixed price, you have to have a good risk reward sort of ratio or a high strike rate. So most traders use ladder and order book and order flow, because you can see it in the Chicago Mercantile Exchange. Because it's a centralized exchange, you can see every contract and every order placed in the market. So you can see where they are. But you will find it's exactly the same as this. Yeah. What did I look? Think about what I just drew on the screen. Let's actually find one. Let's find a better chart to explain it. There you go. So the order book on this will look something like that. Yeah. So these blue lines are large bank orders at areas of support resistance. There's a large accumulation here. Yeah, there's a large accumulation here. Yeah, these basically will very, very closely mimic what you'll see on an order flow or an order book, because these are large orders. Large orders are created either in accumulation breakouts or at support and resistance zones as you get large volumes of orders, limit orders triggering at levels. They create large moves, propulsion gaps. Yeah, so you'll find that these big blue blocks that you see on the chart here will form just after large volume clusters in futures. Obviously, this is, you don't have this in futures. You'd have whatever instrument you're trading, but the principle is the same. All an order book is, or order blocks are, not order blocks, or order flow, you know, is large volume clusters. That's why they call them volume clusters. And voids, or vacuums, as they're quite often referred to. So a vacuum is a low volume area. Low volume areas tend to get blown through, and then you get to large volume areas where there was a lot of price action conducted previously, where you find a lot of price action waiting to be reconducted. So you either stay in them and break out in one direction, and then when you break out, the void usually can't stop it, and you get to the next one. So, and it's exactly the same principle as I keep going on about all day long in here. Yeah, which is why all my targets are at propulsion gaps. Why did I take this trade off this morning? Because it hit a propulsion gap and bounced. Because it is a breakout of a volume area where they are breaking out. When it gets back there, if these guys are still in control of the market, they will add to their positions. When they add to their positions, as this, look, large volume move down, they will then add to their short positions. So at the moment, the battle lines are drawn between that cluster and that cluster. But in the middle of it, we had another one here. So either the shorts here will continue to add to shorts, or the shorts here will get blown through and we will pop to the shorts there. All these are battle lines drawn in the market. You have no way of telling when we will get to them, or if we will get to them, or how we will get to them, but the market will get to them, which is why we use them as targets. Volume profile. That's where volume is sitting in the market. Same thing, same principle. Extensions, ADR. Yeah, if the DAX, the FTSE, the S&P or something is moved beyond its average daily range, look for a volume cluster. Probably going to hit something there because there's going to be limit orders there. They call them icebergs. Yeah, and all iceberg orders are banks and institutions wanting to drive price away from a level. Yeah, so it doesn't matter if you come to me with 100 million, I've got 500 million. You keep giving me your money and I will keep taking your order and I will not let you through. Yeah, until you all go, screw this, we can't get through. Sell it, flip short, go with the iceberg. Bang, we drop away. Market pushes back to the same level. The guy's still sitting there going, no, I told you we're not trading above this level. Yeah, I've only got 350 million left now because you took 150 million in my 500 million. So we'll keep hitting you and hitting you and hitting you and wearing this down to 200 million. Okay, flip, go away. Next time we get back to that level, this guy's only got 200 million left. If we approach him with 250 million, we're going to pop. If we approach him with 150 million, the iceberg's going to hold. Yeah. These are just blocks of order. This is where, ICT came up with the order block concept. Yeah. It's true, in effect, what he calls it. It is just a block of orders. It's just been called icebergs in the futures market for decades. Price points. Futures traders do not look at a chart. They look at a ladder. And in that ladder, they can see exactly how many orders are sitting at that price point. And if they hit that with 150 and it's replaced by another 150, they know there's a bank adding constantly to that level. And if they hit that 10 times and that 150 doesn't go away, it means that they probably aren't going to get through it. So what they'll do is they'll sell all the contracts they've got and go the other way, because likelihood is it's going to pop the other way, which is why I say there's limit orders sitting at these levels. When you hit these, the limits trigger, which is why the moves are vastly faster away from them. It's the market trying to get through and giving up and flipping the other way. It's an always in market in banks. They're always in long or short. They're not sitting there flat most of the time. They're long or they're short. They'll keep long until they can't get through anymore, and then they'll flip short in the knowledge that the other bank is going to push it that way, and they'll make the money back they lost on the longs on the shorts. But they can do that because they've got unlimited amounts of cash, haven't they? Just how it works. Your job is to decide whether or not you are going to get a breakout or not. So when you hit that, you're going to do that. And if you hit that, and you're going to do that, or you're going to assume that these guys have run out of cash and you're going to do that. That's it. Like I said, there's only 3 strategies. That, a breakout, or a trend. Market only does 3 things. Apply whatever indicators you want to those 3 strategies, but there are only 3 ways to trade the market. Because it only goes up, it only goes down, and it only moves through time. There's the only 3 constants you've got. Pound yen's just hit ADR. Or was that an RSI? No, that was an RSI, wasn't it? An RSI. So pound is pushing. Everything's pushing against the yen again. Look, US slightly. Just adjusted my sell stops because the candle's closed. Just move those back down. Not far. Getting there. I have a live account. Oh, hang on. Going back. I just don't have enough to do it safely or worthwhile. Yeah. That's everybody's problem, though, Harold. You're not describing anything different to most people. The journey to get to full-time trading is, and this took me ages to get my head around, the journey to full-time trading is working out what you need to earn as a full-time trader. So if you need to earn, for example, 5,000 as a full-time trader, the first thing you need to do is put 15,000 in the bank. Yeah, because when you jack in your job or whatever you do now, you need to have at least 3 months worth of salary, because if it doesn't work out, you've still got to pay your mortgage and your bills. Yeah, so you've got to have 15K in the bank if you need to earn $5,000 a month, for example, right? You also then need enough capital so that if you earn 10% a month on average as a profit, you need enough capital to be able to generate that return. So you're going to need 50K, yeah, as a starting capital. So your minimum to earn $5,000 a month is 65K to start with, to go full time. Yeah. If your first month is profitable, great. And second month, maybe, great. If your first month is a loss and your second month is a loss, happens, we get multiple losing months in a row. It's trading. You can't control this. This thing is random. If you get 2 losing months in a row, that capital is now not 50K. It might be 48, might be 45, might be whatever. That is now 5K. So you've now got 1 month left on diminished starting capital to get that capital back. Yeah. That's your first 3 months as a trader if you want to go full time in this job. Doesn't sound as appealing now, does it, to all the guys selling you Lamborghini courses for $1,000, promising to double your account in a month? Not real. Not the real world. I worked overtime for months to save enough money to open a live account. You need a bankroll, yeah. It's the same as, if you want to become a professional poker player or something, yeah? If you play poker and you enter the World Series, poker tournament, World Series of Poker, whatever it is, and you win it, yeah? You're probably only going to win it once. Doesn't make you professional. It means you had a really good run, yeah? But to win the World Series of Poker twice or 3 times, you're a professional. Yeah. But those guys have got years of learning, bankrolling, all that stuff behind them before they even get around that table, haven't they? The guys that play on the poker rooms online that win World Series of Poker seats don't last 5 minutes, do they? That's prop. Equivalent. Have a live account, just don't have enough to make it worthwhile. Yeah. No one will give me a business loan for trading. No, you won't get a business loan for trading. No. I mean, I don't want to sell the dream. I'm not going to sell the dream to people. Yeah, I'm not in this game to make a living selling you anything. Yeah, I sell indicators and stuff to help people do this, but I have to support all that. Yeah. I could give it all away for free, no problem. But don't come to me if you want help with anything. I'm not going to update it. I'm not going to do anything with it. I get paid to look after stuff. I don't get paid to make money teaching people how to trade. I do it because I want to do it, because I was taught for free. I've bought a load of courses, obviously, but I was taught the stuff that made me work for free, yeah, by people that asked me to pay it on. This is my way of doing that. That's all it is. And it keeps me accountable. If I come in here and show you my P&L, that's my P&L. I'm not making it up. I'm having a bad month. I'm in profit. How many people can say that? I'm having a bad month. I've only made 1.3%. You've made 1.3%? You're having a bad month? Yeah. Because this is real. This is real life, isn't it? This is what it is like. It's not the Lamborghini lifestyle. I've got one, but it's that big. I'm not having a big one because I can't afford a big one. I can just about afford enough capital to trade with. Forex is the blessing of losing. Forex has the blessing of losing millions in demo while you get it almost right. Yeah, I think demo trading is a double-edged sword because it's not real. This thing here, right? I couldn't give a monkey's what happens with this. I really couldn't care less. It's not real. None of this is real. It's demo. It's It's FTMO. It's not real. I've made 4.76% of fresh air. Yeah, you go out and get a demo account and you trade a demo account of your own, you're making fresh air. Oh, it's gone up again. Oh, I'll add another one. I'll tell you what, I'll double it. I'll triple it. I'll quadruple it. Holy crap, I just made $26,000. If it had gone the other way, you'd have lost the whole lot. Demo trading makes you do stuff like that. You wouldn't do that in real life. If your P&L suddenly goes 35% into drawdown in real life, you don't just go, oh, come back. You panic. You've got to be able to trade with real money to really know what it's like to do it. And it's got to be money that you can afford to lose. But it's also got to be money that it hurts to lose. A good starting point, I think, is a 10 grand account, because that's your family's holiday going down the pan. Right? You lose that, your family's not going on holiday this year or next year. Have that conversation before you start trading with that 10 grand account. Think about it. Suddenly puts a different flip on it, doesn't it? That makes sense. I've been curious about how order books work. Yeah, but the problem with order books as well, Callum, is a lot of it is spoofing, what they call spoofing. So you will see your volume profile. Yeah. And within the volume profile, these are executed orders. Yeah. So the volume profile is what was actually executed at each of these price points. And you'll have a VWAP, which is the volume weighted average price for the day. Yeah. So this is like the point of control, if you like, for the day. Then you'll have the order book, which is the blocks of orders that are sitting waiting to be executed. 90% of that is not real. Yeah. I can place an order on a CME platform at that price point, right, and have my order ready to go. And as price approaches it, I cancel that order and it disappears. Not real. 90% of what you see in the order book is not real, which is why this is why so many traders go on about the iceberg method for trading futures, because it is a very good method. If you have 90% of the order book there, and when you get to that point, it all vanishes and moves up here, you know that that is just banks trying to get price to a level by placing orders and becoming a temptation for people to be able to go and get them, but then removing them as you get there. If it hits that level and it bounces off and that number of orders remains there, you know that if it hits it again and bounces again and that number of order remains there, you know that that is what they call the iceberg. That is an actual order. But until you get there, you don't know whether or not that is somewhere you can trade from, or indeed something you should be trading towards. That is the problem. Every strategy, every system, every way of trading has got an Achilles heel. In futures trading, if you're using order book and volume profile, the Achilles heel is 90% of it is spoofed. It's not real. So you're basing your entire trading strategy on something that may or may not be real when you get there. Again, it's why it's so bloody hard to do this job, because nothing in this job is ever predictable. Every candlestick, whether it be a bull or a bear, the next one can also be a bull or a bear. If you want to get from that level to that level, or that level to that level, because these are the two areas you think it's going to go to, it could take 1 day, it could take 1 week, it could take 2 months to get there. You can't control how far it will go, where it will go, how quickly it will take to get there, or indeed what pattern it will make on its way. Because every single candlestick you see on this chart is a representation of price over time, and it's different every hour. And every day is different to every day before. That price pattern hasn't ever appeared on the EuroCAD before in the past. Go and look it up, find it. You won't. It doesn't exist. So how on earth can you predict what it's going to do next? You can't. Only thing you've got is risk, and a strategy that uses risk to be able to extract money from the market while it's doing one of 3 things. Hard job, isn't it? I've been through this type of spiel before on here, and half of the people don't come back the next day. Good. I probably saved you 10 years of your life. Any goal worth achieving requires sacrifice. Yeah, and time is your sacrifice in this. Don't go rob a bank, Harold. I'm up 5K this month on my demo. Yeah, but what's your starting capital, Harold? Right. You've done the boot camp, I'm sure. You've just committed the holy grail sin. You're up 5K. No, you're not. What are you up? What percentage of your account have you gained this month? I can make 5K in a trade. I've made 5K today. No, I haven't. I made 2.9. Right? I haven't made 2.9. I've made a percentage gain on my account. 100K. So you've made 5% this month. Brilliant. Right. Does that pay your mortgage? Yes. Comfortably or just about? Comfortably. Brilliant. If you can make 5% on a 100K account and you comfortably pay your mortgage with it, no problem. All you got to do now is find 100K. But also, oh yes, you post your record, you're in Discord, don't you? Yeah. But also, don't forget you are massively over leveraged. You're not paying any attention to exposure rule. Yeah. The next squeeze, the first squeeze you get on that account is going to hurt a lot. You're already really overexposed because you're trading all 28 FX pairs. So you're going to get a loss soon. But you'll learn from that loss. 1% on position trading, but doing a bit better on the RSI2 this month. RSI2 is absolutely killing it. I'm loving it. I'm almost at the point where I'm going to re-record the entire bootcamp and switch to RSI2 only. I absolutely love it. On all time frames. It works on all time frames as well. But I mean, it doesn't work very well. It works a lot better on the daily. Daily is where the money's made. That's why the banks trade daily charts. They don't trade daily charts. They trade daily price levels. What's gone on intraday is just people conducting business. Yeah, it's like a fruit and veg store. You stand there all day long selling apples, oranges, pears, everything. At the end of the day, how much money have we made? Yeah, that's what they're interested in, right? This day, has it ended up or down? Down. Okay, what should we do tomorrow? Yeah, it's not about how many you sell intraday. What happens intraday? The price action intraday is irrelevant. Look at it. We opened there. We closed there. Ever such a slight down day. We went up, we went down, we went up, we went down, we went up, we had some news, and we went back down again. Yeah, that is what they saw. That is irrelevant. It's just them executing orders with other banks. It's executing transactions on behalf of Microsoft and Tesla. It's nothing to do with anything but what happened. Are we up or down? Down. Okay, we need to bull next day. Okay, when we get bull, we'll sell. Yeah. Where are we going to sell? 0.5%, 0.25%? Yeah, that'll do. Bang. Right, now it can do what the hell it likes. We don't care. We're out. Or we flipped, basically, they would have done. Everything works well on the daily charts because daily charts eliminate all the chop. And every system and strategy has a condition and a signal. And every system and strategy that works intraday is trying to find a pattern in irrational chop. Hard to do. I'm on autopilot. I never thought I would think I'd get there and can't do anything due to minimum capital. Yeah, it's good that you're there. But you'll think seriously. Don't forget, there's ways and means, Harold, or I didn't get to what I trade gradually. I had some very stupid high risk periods in it where you make big gains. I had some lucky trades in there. If you think about it, every successful trader in the world has a success story they recount many times. Tom Hurgard springs to mind. He had a really lucky trade on I can't remember what it was. It's in his book, but he had a really lucky trade on the Krona or something where he made a fortune, right? That was his lucky one. And that lucky one allowed him to start his trading career with capital. If he hadn't have had that lucky trade, he wouldn't be where he is doing what he's doing. And you've got to have this, and these people out there that sell these compounding courses. Compounding is a great way of getting your capital up to a level you can trade with. Yeah. But it's high risk. Martingale is a great way of getting your capital to a level that you can trade with, but it is high risk. Yeah. So there's ways of getting hold of capital, using capital. So I can double an account, but I won't be able to do it regularly, and I will blow it. At some point, if you try to double an account every month for 12 months, at some point in that 12-month period, you will blow it. You may well get a 10K account to 30 to 50K. What you should be doing if you're trying to do that is stopping at that 50K and becoming a trader, not going, holy crap, I can double an account. Because you can. You've just done it 5 times. So what's that do to your psychology when you start making 10% a month? Go, this is crap. I was making 100% a month for the last 5 months. Next month, you'll blow that account. That's why it's hard to compound, because you get used to compounding. You get used to massive profit that can buy Lamborghinis, but you'll never get to the stage where you can buy the Lamborghini because the account will eventually go pop. Paper, it works. I can do a spreadsheet and I can compound an account up to 25 quadrillion in a period of however many years you want me to. Not a problem at all. But try doing that in real life. First of all, there's no way you'll get that order on. Yeah. Your broker is not going to be able to fulfill the order at the price you want it to, at the lot sizes you're going to need when you're compounding. But as Howell's just said, you can use the RSI2 strategy as a compounding strategy. The strike rate is 80+%. If I do that, let me do a test on. I'll do this test and just show you the actual strike rate on the strategy. With this variation, I don't know what the variation is, but it might not even be a profitable one. I might have been mucking about. So we'll have a look and see what this does. Have you watched that documentary about the flash crash caused by Navina doing massive spoofing? No. Wouldn't surprise me, though. You said carry costs are high in futures. So holding overnight in futures requires a massive amount of capital. So, which is why the prop firms that allow you to trade futures, like Take Profit Trader and Apex and Lilu, those types of guys, you have to shut your accounts, because to hold a single contract over the night on the S&P or the NASDAQ costs something like $4,000 or something silly. Yeah. So if you've got a single contract long on that, I don't know the actual numbers, so I'm just making these numbers up, but just to demonstrate the point, if you're going one contract long on the NAS and let's say it costs you 2K to hold it overnight. Yeah. What the prop firm would have to do if you've got a load of traders which are 150 contracts long on the NAS, they would have to find the capital equivalent of that for you to be able to hold your positions. Because on futures, it is real, as far as I'm aware, but not 100% on it yet. But the futures is so hard to make consistent money out because you're trading ticks intraday. You can't trade daily strategies on it. You're trading intraday ticks at the open, which is why it's virtually impossible to make it consistent. That's what the cost is, the carry costs. So there you go. This strategy there, yeah, that's a normal equity curve for a profitable strategy. Yeah, it ain't going to win all the time. It's going to lose. Yeah. What's each of these? Blown prop account. What's this? 23,000 in profit. What would you rather have? 23K in profit on one instrument over a period of 4 years, or pass prop, evaluation 1, evaluation 2, blown, reset, evaluation 1, evaluation 2, blown, reset, evaluation 1, evaluation 2, funded, just about to get a payout, reset. Yeah. Prop. Real life. Totally different. So the strike rate on that is 66%. That's not good. So that's a high profit. So that's one of the high profit, high drawdown variations. So 23% drawdown, 23% return. What's the risk reward ratio on that? Return on drawdown ratio 1. Would you rather have 23 grand on 23 grand risk, or would you not? What's wrong with that? Whoever said that you had to get a positive R? No one, ever, apart from the guy that sold you a trading course, said, no, you can't make money unless you do that. Bollocks, I've just proven it wrong. Real wild. That's not how it works, is it? But that's the strike rate is 66%. So if you look at this P&L, yeah, if you were to start compounding here, I'm sorry you blew your account. If you were to start compounding here, you doubled your account. If you start compounding here, you blew it. If you start compounding here, you lost it. Sorry, other way around. Yeah, but you get the point. If you started compounding here and you started with 10K, you're probably ending up with, well, I don't know. I don't know what the risk is on this, but the P&L there was 62. The P&L there was 780. So it's 20K. This is using tiny risk. This is not using compounding risk in any way, shape, or form. The compound on that would have been double, treble, quadruple the account. But you can change that. So you can make the risk lower. This is using, this is what I was testing. Right. So that is testing martingale, doubling the risk every time. And again, like I said, martingale, you will double the risk. You will make it massively profitable. If you suddenly lower that parameter down, yeah, you will find the drawdown will be a lot lower. I should have changed the target. Hang on, sorry. So if you move that target down and you change the risk parameter, you'll find the equity curve will suddenly smooth out a lot more, but it won't make as much money. But the strike rate will have jumped from 60-something% up to 70, maybe something like that. Maybe 80, don't know. But your account can withstand this. Your prop account can't. You can. There you go. So that made 66K. So made less money. Yeah, but look at the strike rate, 76%. I can get that up to 85%. Yeah. So if you want to double an account and grow an account fast, what you need are less trades with high risk and a high strike rate. But get out fast. Yeah. That set file there would do it. Look at it. Drawdown on the account is 8%. Return on the account is 8.5. No, sorry. That 100K account. It's a 50K account, wasn't it? Yeah, 50K account. So it's returned 17K profit off of a 5K drawdown. So the return to drawdown ratio is just over 3. All this is with the position trader EA. You don't need anything more complex to trade RSI2. It does it absolutely fine. And this is just trading the 4-hour charts. Yeah, you go up to the daily charts. That strike rate, even higher. Because you're not trading as much chop. Not with that setting, I wouldn't imagine. No. I was going to say, you'd need to adjust the settings, but didn't take any trades. That's because it's using the wrong filter. But 4-hour time frame is good enough, certainly good enough to trade. An hourly time frame, you can make a hell of a lot more money, but the risk is a lot higher. But the return is 3-4 times bigger. But it's going to cost you in drawdown at points. But the return is much bigger, which is nice. I posted. Oh yeah. Using RSI2 and my normal methods on prop. Great crystal ball indicator. Yeah. It's the thing, because it's a stop loss strategy. Yeah. Obviously, you're limiting your downside, which you need to do with prop, because your downside basically is 5%. Isn't it? As soon as you get to 5% drawdown, that's it. You're dead. Or 10% drawdown on the account, you're dead. So you've got to limit the drawdown. You've also got to limit your exposure, which is where people also go wrong in prop. They overexpose dramatically. Obviously, this is not a good set file, whatever it is I'm doing to use. But it will still generate alpha. You see, I'm saying this is bad. It's not bad. It's making very good money. over a period of time, because what the strategy is doing, which all strategies do, is it waits for market conditions to be right to make money. When market conditions aren't right, it limits its downside. Yeah, this is range bound. It's a mean reversion strategy. It's range bound. When the market's trending, it won't make money. When the market's range bound, it will. Still only produced 10K profit. Damn, we only made 10K by having a really bad variation of the strategy. But you'll find at RSI2, if you're going for short, small targets, that's what I'm finding with RSI2, small targets, small scalps. Compounding is guru nonsense, yeah. It will happen, though. This is the thing. You can do it. You can make money with it. It's just very, very difficult. And it's the problem with compounding as well that you'll find, which plays on your psychology, is it's the old 2 steps forward, 1 step back. 2 steps forward, 1 step back. A little bit like that P&L. Yeah, that's what it's like in the real world. And because people's expectation is to make money consistently, that doesn't encourage them to do it. But if they just give it the time and wait for the trade to work, this doesn't take many trades, but if you wait for the trades to work, that took 379 trades. But again, put that in a portfolio, my God, you get a different result. Yeah, stick that in a portfolio with 10 other instruments, and all of a sudden that bad profit curve is way ironed out, which is what it's all about. Position trading, it's portfolio trading. That's what we do. We trade multiple instruments because we don't know what to trade. I don't know what's moving tomorrow. I need to trade what sets up. Whether it moves or not is not down to me. If it goes, brilliant, I shut it. If it doesn't, I'll deal with it. Same with RSI2. It will either move up and give you 0.5%, 1% profit, or it won't. And if it doesn't, get out. But you will get back in again, won't you? Because if it goes down, if RSI2 is extended, yeah, and it goes down and stops you out, you get in again because RSI2 is still extended. Just consistency, doing the same thing every day, which is why I do this, because it's boring as hell, this job. Harold Pitboss wants to see your user ID. Okay. Not a gambler. No, I'm about to buy the Posier. Can you explain the process? What, of buying an indicator? We just go into the market on your chart and buy it. I don't know what you mean. So on MQL5, when you buy something on MQL5, you're buying it through MQL5, and then you just download it into your terminal. So it will appear in your indicators list in the navigator. There's a link. Very simple, very, very simple. The best way to buy an indicator is to buy it through your marketplace. So buy it in here. Go click on market there. And go into the marketplace here. Yeah. Oh, I've got money. That takes ages to build up. Hopefully you'll add to that today. But it goes, so go to the marketplace and buy it through here. So search for Position Trader EA. There it is. Click that. Click buy. And then that button will turn into install. When you click install, it appears in your list. Just use it. Yeah, it's very simple buying from the marketplace. Which is why I do it on the marketplace, because it is just really easy. If I started selling my own stuff on my own website, I'd need to set up membership systems, payment systems, encryption systems, licensing systems, all that crap. My MQL5 does it all, and it's really easy to buy. Literally, it's 2 clicks. If you get stuck there, come in Telegram or Discord. There's always people around that can help. Right, I'll leave it there because I've waffled for long enough. It's 10:30. So I will be back tomorrow, and then we will see how we get on tomorrow. Euro US dollars off. Euro pound is off again. We've broken it. There you go. So we're out at the highs. So I think there's a very good chance that we're going to get the run up now. So that is our next support. We're through there. So that, sorry, resistance. So that's our next resistance. Once that resistance breaks, there is nothing but clear air to gap fill. So target 125 ADR. So there's a good chance we might do that today. It's tough, but you know, there's a 42% chance historically. We'll get through. We've got to get through this first. So we're testing it right now. So again, there'll be limit orders there. So we will either hit that and we'll do that as they are shorting it. But I suspect that's where they were protecting it from. So there's a good chance I think we'll just pop that and be gone. Good move on the euro. So ever such a slight positive German IFO expectation, which might be helping that this morning. We're unlikely to pursue negative rating action even if Japan does not meet its primary budget target. Okay. Do you immediately enter on the RSI2 strategy even if the daily candle has not closed? No, always wait for closed candles. The reason I never do anything, it was drummed into me by one of my mentors, closed candles only. Yeah, never work on a positive candle. Look at this candle now, right? Where it is here. This candle could end up life like this. Yeah. So if you short this now or go long on this now because it's broken out and it ends up like that, you'll be going, Christ, that's a good sell signal. Wait till the hour is up. And don't forget, all this is a representation of price over time. Doesn't mean anything. The next candle can be whatever the hell it likes. But what this candle is showing you when it closes is that the bulls are full and like properly in control of the market. If it closes like that, it shows you that the bears are properly in control of the market for the last hour. If we're just looking at the view of price on an hourly basis, you cannot make a decision in the middle of a candle. The only time I would ever make a decision in the middle of a candle is if I was playing a resistance bounce. So this is a weekly level we're at now. So if I am wanting to be the limit order of the bank and I want to get in the next time we hit resistance, when we hit resistance at any point, I will get in short. But for normal strategies, this indicator, if you look at the RSI2 and what it's reading is, let me move to a 5-minute chart just to demonstrate. The reading on this is at the moment 99.87. Yeah, this will fluctuate dramatically. So that candle there, right? That red candle you can see on the screen is a good example. Look, that tiny little red candle, and that tiny little red candle there caused that movement. Yeah, that's 10 RSI, 10 reading on RSI. That little candle. So what I want is when the price closes, I want it to be going that way. Yeah. When I get in, I want it to be going that way, which is why I use the RSI, the moving average signal. So on the daily chart, when you get that and price starts to pull back, it takes a long time on the daily chart for that RSI signal to drop. So intraday, you get the signals, which is why entering on the lower time frames is what we do with signals, and we use the higher time frame for the market condition. But yeah, but that will fluctuate a lot. It's now at a different reading than it was when we started down here. It's 99.8 something. It was 99.7 something when I started looking at this. Changes constantly. Always candle close, everything you do. News is a good example. A lot can happen in the news. Do you use US or UK close? 10 o'clock UTC. I don't get choices. My broker closes the candles, not me. But they're US. I think I know what you mean. They're US closed candles. They all are now. The only time you'll find a UK closed candle is probably with a spread betting company like IG or someone like that. Because that's not real. Again, it's not real. Spread betting should be clue in the name. Spread betting. Do you think that's gambling or trading? Gambling or trading? Betting. But it's all gambling, isn't it, at the end of the day? Limit orders triggering at the highs. So same as what we hit here. We'll probably find a pushback from that level. So we're looking for that pop through. I'm really tempted to shut it just because I've shut it and I can bank $400. So that gives me $550 on the day, which is another 0.5% profit. But I'm going to give it the benefit of the doubt because if we do get through this level, we're off. Right, I'm off. I'll see you tomorrow. Well, I might see you tomorrow, might not. But I'm back tomorrow afternoon at 2:15, then back at 8 o'clock on Wednesday morning. So be very careful. I'm not on until after that's out tomorrow, but any CAD positions you've got, take your profit before the news, because the news could go against you. If it goes your way, happy days. Other positions come into profit, but if you've got profit, take it. So CAD tomorrow afternoon at 1:30 is our next news, and just be a little bit aware of Macklin, but unlikely to do anything. All right. Have a good day. Anything you need, let me know, Telegram or Discord. Otherwise, I will be back tomorrow. Have a good one.